Hey there, how are you doing? Today we're going to talk about something super important. How to avoid getting an income tax notice even if you think you've done nothing wrong. We'll talk about 4 key things. How much cash you can use without trouble? What's the limit for UPI payments? How much can you put in a fixed deposit? How much can you spend on credit cards without raising red flags? Sounds simple, right? But trust me, one small mistake and the income tax department might come knocking. Let's understand this better. Let's start with cash. A lot of us still deal in cash, especially for business or big events. Here's the rule. In a savings account, you shouldn't deposit or withdraw more than 10 lakh rupees in cash in a year. Not saying it's illegal to go beyond that, but the moment you do, the bank reports it to the IT department. And if they can't match it with your income or you don't have a proper explanation, you might get a notice. Let's say you withdrew 11 lakh rupees in a year, but you filed your ITR and everything is clear, then TDS of 2% will be cut only on the extra 1 lakh, which is 2,000 rupees. That's okay. But if you haven't filed your ITR, then the fine increases massively. If you've withdrawn 80 lakh rupees, you will be charged 1.6 lakh as TDS. And if it crosses 1 crore rupees, you could be paying 5% on the excess. Ouch! That will hurt. Also remember, no single cash transaction should be over 2 lakh rupees. Whether you're buying gold, property, paying someone, whatever. And for real estate, the limit is even lower. 20,000 rupees in cash, okay? So don't try to buy a plot with a suitcase of cash. It doesn't end well. Now, if you're a business person and using a current account, the cash deposit or withdrawal limit is higher, 50 lakh rupees per year. But here's a small thing people miss. Let's say you're paying your staff or buying supplies in cash. If it's more than 10,000 rupees in a day, you can't claim that expense as a business deduction. So basically, your profit looks higher and guess what? You pay more tax. So yes, the money is yours, but the government says, fine, spend it. But if you don't follow the rules, we'll tax you more. Now let's talk about UPI, something we all use every day. Super easy, super fast. Here's the deal. If you're doing UPI transactions under 50,000 per year, you are safe. Not a problem. No questions asked, no notices, nothing. But if it goes beyond 50,000, say 2 lakh in total, the tax department might check if your declared income supports it. Like if you're earning 3 to 4 lakh a year and sending 2 lakh through UPI, no issues. But if your income is shown as 1 lakh rupees and you're doing 3 lakh in UPI, that's a mismatch. Many people use UPI just to collect cashbacks and rewards. That's fine. But remember, if your cashback in a year is more than 500 rupees, it's considered taxable income under income from other sources. And if your cashback or total UPI collection touches 20 lakh a year, the government might even call it a business and ask you to register under GST. Even if you were just hunting for cashback, not doing any business. So yeah, free cashback isn't always free. Coming to FDs, a safe option, right? But if you deposit more than 10 lakh into FDs in a year, the bank will report it to the income tax department. It doesn't mean you're doing anything wrong, okay? But they'll check. Are your income and FD interest matching? Can you justify where the money came from? If everything is lined up, not a problem, great. But if you've shown low income and somehow deposited 15 lakh rupees in FDs, then be ready with explanations or you might face questions. Now let's talk about our favorite spending tool, credit cards. Here's the thumb rule. If your annual credit card spend goes over 10 lakh rupees, it gets reported. What happens then? The IT department checks your income versus your spending. So if you're spending 10 to 12 lakh a year, but your income is just 3 to 4 lakhs, that's a red flag. But if you're genuinely earning well and spending accordingly, no stress, no problem. Just keep your bills and bank statements ready. Transparency saves you every time. And one more thing, don't try smart tricks like rotating money across multiple cards just to chase rewards or show inflated spends. That's a big no-no. IT and even GST departments are watching that now. All right, let's do a quick recap. Savings account cash, 10 lakh per year. Current account cash, 50 lakh per year. No single cash deal over 2 lakh rupees, 20,000 rupees for property. UPI under 50,000, not a problem, chill, okay. Above, you have to show matching income. Cashback, it is taxable if they are more than 500 rupees. FD deposits, if they are over 10 lakh, they get reported. Credit card spends above 10 lakh rupees needs income proof. Bottom line, if your lifestyle matches your income on paper, you've got nothing to worry about. But if it doesn't, be prepared to answer questions. This was a piece of information for quick awareness. If this video helped you clear your doubts, do drop a like. Share it with someone who swipes their credit cards like there's no tomorrow. And comment down below and tell me what you think about all of this. And subscribe to our channel Bosswala English for more clear, no jargon business explainers. See you next time. Till then, stay smart, stay sorted.
Bosswala. Be the boss.